Hello, my name is Harink and I'm presenting this brief paper on why you should invest in childcare property, and also aim to give you some background on the childcare sector. We move to the first slide. Just to give you, this slide is aimed at giving you a bit of an understanding of the breakup of the childcare sector. So approximately 55% of children are in some form of care. This is children in the age group of 0 to 4 years. Of those 55% who are in formal care, some 82.7% of those children are in long day care, the form of childcare assets that the Arena REIT is invested in. There are some strong fundamentals at play in the childcare sector at the moment, and they include the growth in the number of children, with some significant growth in the period through to 2013, and also further projected growth in the number of children in that 0 to 4 year age group. Secondly, there are higher female workforce participation rates at play, which have risen 5% since 2001. Government funding at present of $5 billion is the amount that is being spent on some form of childcare benefit and childcare rebate. All of these three factors are contributing to an increase in the number of children in care, with some 40% increase since 2004, and those children spending more hours in care, which has risen in recent years to 27 hours a week on average. In terms of population, the 0 to 4 year age group of children has increased 18.4% since 2001 and is projected to increase a further 16% in the period through to 2025. The childcare sector is driven by this population growth, which is both in the form of increased births but also a significant impact from immigration. In terms of labour force participation rates, male participation rates have been declining steadily for some time and are currently at 71%, while female participation rates have increased from 52% to 59% in the period 1990 to 2013. Interestingly enough, they've remained flat since 2009, and hence various government programs looking at how that can be increased. In terms of government spending, the government's latest forward forecasts are for $25 billion to be spent on childcare between 2014 and 2017. During that period, there's a significant increase in expenditure as a result of an increase in the childcare rebate, which in turn is a result of increased numbers of children, but also increased costs. The next slide presents some data on the average hourly fee by family income group, given that the childcare benefit is means tested, while the childcare rebate, which is 50% of out-of-pocket expenses, is capped at $7,500 and has been since 2010. So if we have a look at the 2011-2012 period, you'll see there that there is a significant amount of support at the income level of $30,000, but by the time you get to family income of $150,000, there is no childcare benefit being provided at all, but half the cost is being covered by the childcare rebate. Interestingly enough, the average childcare rebate received per family in 2011-12 was $2,132, and only 5% of families received more than $4,354. So the cap of $7,500 doesn't affect too many people. As we said earlier on, there is an increase in the number of children in childcare, and there's been some significant growth, particularly in 2010-2011, in the number of children in long daycare centres. More recently, there's been some significant growth in the use of family and home care, This is particularly over the 2012-13 period, which appears to be driven by unmet demand in terms of long day care, but also the costs of care increasing and people reverting to family to help them care for their children rather than long day care. The next slide deals with the numbers of hours that a child spends in care, and graphically you can see that the long day care has continued to grow slowly, but that's very much a reflection of the large number of children in long day care. Family daycare hours have increased to almost match long day care by 2013, and outside school care has fallen slightly over the last 4 or 5 years. In terms of the supply side of long day care centres, there's been a 43% increase since 2002 in the number of long day care centres. Between 2003-2008, which is the period when ABC was growing significantly, there were 1,401 centres added, which is an average of 280 centres per year, or a 6.68% growth, whilst in the 5 years to 2013, the industry added 713 long day care centres, or an average of 143 centres per year. We think the number of daycare centres will increase to over 6,500 by June 14, which will be the largest increase since the mid-2000s. Another major factor in terms of increasing the viability of childcare centres has been fee increases, and you'll see that the average fee increase over the period since 2004 has been 7.2%. Much of that in recent years has been an increase to reflect increased costs as a result of the changes in childcare regulations, and in particular the child staff ratios that are now being set. But what it also does is provide an incentive to operators to add capacity, particularly in areas where additional childcare centres are needed. The next slide is seeking to give an overview of the mix of childcare operators in the various states. New South Wales, Victoria, Queensland and WA have a majority of private operators in those states, and that's where the major numbers of childcare centres are located. Overall, 61.7% of childcare centres are operated by the private sector, 32% by community groups, and government, which is mainly local government, 5.8%. In conclusion, therefore, what these slides show and what the industry is seeing at present is strong childcare fundamentals, resulting in more children in care and spending more hours in care. Long day care now represents some 83% of formal care and will continue to be the major supplier of childcare in Australia. The number of long day care centres has seen moderate increases in numbers in recent years, but development activity is starting to grow, and we expect to see significant growth in the number of childcare centres this year. Average hourly fees for long day care centres have risen steadily, with an average of 7.2% since 2005. And nationally, some 62% of long day care centres are run by the private operators. Childcare property is a specialised essential service that's outperformed most property sectors, and hence we see it as a good investment opportunity.